Hey guys, how's it going? Welcome to the midweek market update. Hope you're all having a fantastic week so far. So I've been kind of thinking sort of about these market update videos. What kind of format is the best way, I guess, to provide the most value? As beforehand, I've kind of just been going over, the first 3 days of the week, I guess, the price action of it. And obviously my charts can look a little bit messy because I try and leave all my old drawings on, just so I can kind of go through them with you guys and obviously look at the trades and the positions. But then obviously my charts ends up looking like this, and it can be quite hard to kind of see what's going on, and I'm kind of jumping all over the place as I'm going through the different time frames, trying to explain sort of the different available trading opportunities. So I think potentially maybe going forward, obviously with posting daily markups on euro dollar in the community as well, maybe use the markups to kind of see the trading opportunities for that day or for that session, and then so you can see the individual trades in there, I guess, in a bit more depth. Then you can go and test those and dig into those yourself. And then on this kind of midweek market update video, I kind of use this more to talk about the higher time frames and the medium time frames, but specifically kind of how to pick which POIs. Well, for me, the 15-minute is where I pretty much pick the POI I want to trade from, right? So I kind of think the best, or the most value that I think I can give from these videos going forward is to kind of spend the majority of the focus on POI selection, talking kind of about that and analyzing structure and where we're going to try and target price. More so than just not purely, but more so than kind of focusing a lot on the entry model, on say the M1 or the 15-second, because for the most part we know the entry models, right? They're pretty much the same every time. It's the liquidation, mitigation, flip chock, whatever you want to call it, right? It's just pretty much the exact same thing. But what tends to be different and unique in each case is sort of the POI you choose to trade from, and then kind of how you try and target that position once you're in it. So I think for the Wednesday's video, but obviously we're going back over Monday and Tuesday and Wednesday's price action, focusing on sort of the M15 more so, and just talking through that and how that developed. I think hopefully will give you guys a bit more value, because we generally all know how to enter. It's pretty much the same entry model for everyone, but it's picking those higher time frame and medium time frame POIs and then kind of trying to see how far we can push price once we're in a position. I think that's potentially where more value can be had. But yeah, I'm interested to know your thoughts. So we will still go through some trades and some entries, but I don't want to kind of go through every single potential setup that there was, because really I want to focus more on the high probability setups, right? Kind of those really good trades, and like I said, just focusing on the POI selection. So yeah, we'll kind of go through a handful of trades, but yeah, like I said, don't want to ramble anymore. So daily chart. Very quickly, we know that we've had that major break of that weekly level, big double bottom there, equal lows. So at any point we could be expecting that daily and or weekly pullback. This is the daily range we are within. So you have to bear this in mind the whole time. It's very easy to get kind of zoomed in on your 1 minute chart or whatever. If you're looking for the kind of those day trading entries each day, and you can forget where we are within the daily leg, right? We're obviously right at the bottom. Yes, we can keep going as long as we are bearish. Sells on the cards. I am also more than happy to keep smashing that sell. But I'm always, wearing in the back of my head that the minute we get that daily change of character, that could be the sign to initiate a daily pullback back into premium prices, or back into supply zones that are ready to be mitigated before we get that next leg. So you kind of have to bear that in mind with how far you're trying to push any shorts that you may be in as well. We are very low down in the leg at the moment, but if we continue to fall down, next kind of key area I'll be looking at on the daily chart is this area of supply down here. One last thing I'll mention as well on the daily chart. Remember, very basic thing, but we talk about this a lot on the course. How can we anticipate that a run is over and a pullback is commencing, other than just looking for price to obviously hit a demand zone? Well, we look for a change of character, right? So at the moment, price took the low, right? Yesterday it took the low towards the close of play, which means we now have a minor high here. So if price was to wick this high and break this high on a daily chart, that is a daily change of character, and that can signal that we are about to commence that daily pullback, right? And then we can start to target these higher supply zones or up and towards the premium of this leg, right? So that is just something to bear in mind as we're starting to fall a bit more correctively. So if we jump down into the 4-hour chart, at the start of the week, we were very clearly bearish with these big, large swings in price. And then last week we broke the low down again, and we came into this reasonably minor demand zone. And then coming into Monday, we're essentially just looking for a very simple continuation play on the 4-hour chart, looking for that lower high to form, either with these first buy to sell wicks, or we obviously had this inside bar above, or the origin and the extreme up here at the top. Coming into Monday, we ended up sweeping that high that formed on Friday. We swept the high into that first supply zone, and that was enough for price to eventually, it took until late on Tuesday during the New York session, to break and close below that 4-hour low. So that's very simply, let me zoom in a little bit more, pretty much what went down on the 4-hour chart the first few days of the week. We were very bearish. We came into that first decisional supply zone. We swept the liquidity of that high that formed on Friday. So all those buy stops behind there, they got liquidated, and then it took a little while, took about a day or so, but eventually we then formed that lower low, right? So now price is playing within this 4-hour range. Now, something to bear in mind is the minute that we broke and closed below that low on the 4-hour chart, we pretty much retraced straight away. We are mitigating out of the EQ of that demand zone. So, the minute that you see that, and then during Asia, we had quite an aggressive retrace for today. That's a bit of a warning sign. The price is really struggling to sustain those lower lows, and we could potentially now be ready to get that 4-hour bullish trend change, right? If we break and close above this swing high here, that would then be our daily change of character, which then is probably game on for that daily pullback. And then we can start to look for those higher up targets on the daily chart, or we can look for those higher up areas of supply within the daily leg. So that's what I'll be expecting if we do get a break and close above this high here. But until that happens, more than happy to look for shorts, right? And we can just continue with that almost dumb and blind assumption that the 4-hour bearish trend is going to continue, right? If this high is protected, and then we can look to target this low, right? And then try and get that lower low for there. Only other thing I'll kind of mention is on the 4-hour chart for kind of Monday, Tuesday, and Wednesday's price action is coming into Monday. Obviously from Friday, price had taken out this substructure high here, so there was no change of character, because for me all of these candles break the prior candles low, so that was all part of the down move. So when we pulled back up here, we pulled down, and then we took that high. For me, that's not a change of character, it's just a substructure break because we didn't take out anything in the leg, right? So the point I was going to make here is, although we did have a substructure break, it does obviously creates a very, very minor demand zone here. So I was cautious of that when price came into here on Monday, that potentially we could see bullish order flow starting to kick in with demand holding, and that would bring us up in towards these higher supply zones here. Ultimately that failed, right? Price came in, it reacted, we then broke and closed below the reaction, and then that flip led to us getting that lower low. So then today, as price came into that flip, this again was where I was looking for shorts to then target that lower low. But what has happened, as we can see, is price come in, it's reacted, and it's pushed up. So now we essentially have a flip, although we are coming into the extreme. So we can kind of see that battle commencing at the moment, and it is looking like potentially we may get that higher high coming in tomorrow, but we'll have to see. Not going to assume until that actually happens, but what we can look for is potential longs coming into this area, right? This flip that's just occurred, to potentially try and anticipate that 4-hour bullish trend change if you wish to do so. But obviously it's a bit more risky because you are trading against the higher time frame bearish trend, but that is just something to bear in mind going into tomorrow, is that we do have a supply to demand flip in this region. So you could look to play the longs from here and look to play any shorts within this extreme, right, to see if we are going to get that lower low there. So jumping down to the 15-minute, if I can find it. That's the 4-hour chart there. Let me get the 15-minute there. Open this up. Okay, so 15-minute. So this was the bearish range that we were playing within, with this high up here and this low down here. So coming into Monday, this was the high that I was talking about, right, that formed. So this high formed on Friday, where we came up into that 4-hour supply zone. Then we chopped around coming into Friday's play, and then going before the London session, price moved up, it swept that high, right, triggering those buy stops, and came into the unmitigated fresh M15 supply zone that was nested within those 4-hour buy to sell wicks. And then that's when we saw the flip and the chock. Okay, so now it's game on. The internal 15-minute structure is now bearish and in line with the overall higher time frame structure, right? So now it's really, all systems go to kind of start looking for shorts to try and target that weak low. So zooming in, we got that initial flip, we pushed down, and then we came back in straight away. And this is kind of the first real sort of M15 short you could have taken. Or sorry, that's really the first short, which we'll take a look at in a minute. And then if you wanted to wait for a little bit more confirmation, right? Because when price comes into here at this point, the M15 internal structure is bullish. Maybe you want to be a little bit more conservative, so you wait for the M15 to then, the internal structure to switch bearish again. That's when we get the flip and the chock. So then when price comes back into here, this is a great opportunity to look for your first short if you, hadn't already looked for shorts within that first move up here. So that flip then holds. Right, old demand just becomes reaction points, and then we get another flip occurring here, right, with a fresh flip supply zone. Now, when you kind of have two POIs at this point, right, so price is pulling back and you're looking to get short for that M15 lower high to try and catch that next leg down, and you've got this POI here, and then you've got the extreme up here, right, which one are you going to play? Maybe you're only going to play one, maybe you're only going to play both, right? It's going to have to be down to you, down to your trade plan. But we have to understand, is if you're trying to kind of be a bit more picky and select which has the higher probability, well, yes, I like this because it's a flip zone, because it came into old demand here, it reacted, and then it pushed down. So that is a decent zone, and I would be more than happy to look for shorts there personally, even though I know it's not the highest probability trade because it doesn't have any inducement in the leg, right? It's pretty much a straight push. And when it was formed, it's on a sweep zone. It didn't take liquidity, right? It just came up and it came down. So when price came back into here, yes, you can look to play their reaction. But you just have to manage your expectations that it's very likely that reaction is just going to do what? It's going to generate liquidity with those equal highs for the POI above. This POI, it's not really a sweep zone. It's not a flip zone, but it is a sweep zone. And it's the last mitigation, right? From the supply up here, this is kind of that last mitigation. We've had the movement down, and now we're just following that series of bearish order flow, right? Mitigation to mitigation. So when price comes back up here, this is a really high probability area to look for short. So I guess the point I'm trying to make there is there's absolutely nothing wrong to play both of these zones. It more than meets my plan to personally do that. But if you're someone who kind of wants to be a lot more refined and really kind of limit the amount of trading opportunities that you have, then obviously this is the better area to be trading from. It's the extreme, it's a sweep zone, it has inducement in front of it, the whole 9 yards. But obviously you have to accept that sometimes price will come to here and go. So that's just the trade up that you have to use with trading. Always waiting for kind of those high probability POIs. So they're kind of the two main areas that I would have looked for on Monday. So we'll kind of look at the entries for those now. So that's when price came up and swept the liquidity initially into the M15 supply zone, nested within those 4-hour buy to sell wicks. We then got the flip, price came in straight away, right, pushed down, came back up, looked to play the moves here, but you have to understand that it likely could just be a reaction for price to come up higher, right, to generate liquidity here, and then boom, this is basically this move right here. That is your highest probability setup because the M15 has switched bearish again, right? The internal structure is in line with all the higher time frames. We now have everything we need to see: inducement, sweep zone. It's the extreme. This is the area, and this is perfect example of where you could literally just set your M15 limit order and be pretty, definitely doesn't need to be down there. There we go. What's that? So if you're super tight, 4 pips, probably give that a pip buffer, maybe even half a pip's probably enough. Let's just be conservative, 5 pips, and then you're in a very, very tidy trade, right? Target the low, there's your 10R. One trade. From the minute we kind of got that chock, or maybe wait for a bit more of a minor breaker structure there, you've then got, 10 a.m. till 3 p.m. So you've got, quick maths, 3 + 2, 5 hours to, notice that, set your entry order. That's entering on the distal as well. You probably could have got, if you did the 25% entry, could have got a little bit tighter, but there you go. Quick set and forget to the low. That's a pretty easy pro trend, perfect way of trading, right? Or you can drop down and look for the M1 entry. So let's see if we can do that and scroll back. So these were on the markups, right? So that first initial move up on the Monday morning, if you wanted to play this move here before the M15 switched, or the internal structure switched bearish again, there was a nice M1 flip. Personally, I didn't get tagged in because it only tapped the distal, but you can see it, right? Liquidation, mitigation, there's the reaction, right? Then we finally break down and close below the reaction here, and we obviously get the change of character at the same time. So I just draw my range on my entry on the whole range, and then a fixed 2-pip stop, right? Didn't tag me in, unfortunately. Literally tapped the distal and dropped, but there was a beautiful 15-second confirmation entry here. So if you are happy to use a seconds entry and you see that you're not getting tagged in your limit order on the M1, this is obviously something that you can use to get in if you're happy to do that. And then, and then this area here, this trade, remember, is when we then got the M15 chock and flip. So now the M15 is internal structure is back in line with the swing structure. It's now bearish. So there was a quick move here where you could have literally just set your limit order, kind of a risk entry, I guess, You have your M1 flip here, push down. It's subtle, but it is a sweep zone. This zone, when it was created, it takes the liquidity behind that high and then causes the break of the low, right? So it causes the M15 change of character and the flip. Price came in straight away, so that would have been a tidy entry. There was also a beautiful 15 seconds confirmation entry within here. Again, if that meets your plan, but I'm kind of trying to keep these market commentaries just focused on the M1, just to keep things simple. So then if you looked at the M1, price came into demand. This is where the reaction is, right? That bullish reaction. Then price broke down and closed. So the only way you kind of would have stayed in this trade if you had a 2-pip stop is if you took the EQ. Otherwise, if you took the distal, you would have just got spiked out on that trade, unfortunately there. But that was a pretty tidy setup. It did push higher and basically mitigate a 15 seconds flip within here. And then price push down lower. Potentially you could have looked at playing this long, right, from the flip zone down here, but it's pretty aggressive trade, so not really going to focus on that. Now this is the area that I was saying, right, this 15 M15 flip zone here, right, it is a zone. I'd be more than happy to play it, but you have to understand why ultimately it failed. No inducement in the leg, and it's generating liquidity, right, for the sweep zone up above. So when price first came into it, all right, mitigated this M1 here. We have that demand, right? Price reacts into it, tries to push higher, it fails to do so. Then we break and close below it. We get the M1 chock. For me, that's pretty much everything I need to see in my entry model. That would have been a loss even with a very, very safe stop above the high there. Then you get another entry, right? Price comes into that last bit of demand, tries to push up higher. Then we get a clear push down. Tags you in on the distal, 2-pip stop. If you entered the distal, would have just been spiked out. Or if you entered on the EQ, we just stopped just above the top of the zone. That's obviously the much safer way to enter. Or if you don't take the whole range, right, you take the refined candle, that would be a distal entry, and yeah, you would have just stayed in. Otherwise, again, if you just got stopped out, there's some nice 15-second entries within here, just following the kind of the bearish order flow. But the point I want to make here is that both of those entries meet my plan, but you kind of have to understand why it ends up just being a little bit of a trickier move. And even if you were in a trade, yeah, well, you would have been able to move to break even if you had managed to stay in on that one. But ultimately, it generated liquidity for the high move. So if you took these two losses, it's going to depend on your max loss in a row in your plan, but definitely this is the trade that you don't want to be missing, okay? Because we come into the sweep zone, we've got inducement, this is the area that we want to be trading in, and then we get real nice, look at this, pretty much perfect equal highs here on the M1. So we liquidate, mitigate, come in, right, react, we try to make a high, we fail to do so, and then as soon as we close below this range here, we get the failed reaction, and then you can sell obviously either whether you take the range or whether you take the refined entry. Both will have tagged you in there. Fixed 2-pip stop loss. For me, that's what meets my plan, right? And then that's boom, that's the trade. Now you've entered from, this is the area you're entering from, right? So now you're just following those hard time frame mitigations because we've come into here, we've pushed down, right? So this is the extreme. This is where supply has to hold, otherwise demand's going to be back in control and we're pushing up higher. So if you get in a position here, you at minimum want to be targeting the most recent kind of internal swing low there, or trying to gun for this low down here, right? And that's how you can try and stay in that trade. And ultimately, let's see, where's the trade I was looking at? This trade here. If you held to that kind of nearest low there, that would have been a 14R, and then if you held down to the actual 4-hour swing low, let's see where we are, you would have got a trade for 25R, right? Obviously you might not have held full volume, you would have taken off 20% to move to break even, but the R is still there, and that's what 3:45 on 11th, 3:45 p.m. So that's about a day for 25R, right? Insane, but what is it? It's super simple stuff, right? And don't forget, you could have just been super relaxed and taken that M15 entry, obviously a little bit wider stop, but who cares? 5 pips is still insane, targeting that 4-hour low. And then there's 10R. Maybe you want to trade both, have your limit order and trade the confirmation, and then you've got 35R, right? It's there, it's simple, it's easy. You can avoid kind of all of this mess in the middle, but the point I really want to make here is even if you did take these couple losses, who gives a shit, right? Here's a nice cleaner entry, and then boom, you're in. So tons and tons of potential opportunities here, and that's just Monday. That's literally just Monday. Your week could be done, your month could be done at that point. Yeah. So don't want this to turn into a flipping forex sales pitch, but sometimes it feels like that when you're talking about the daily opportunity that we have here. It really is there. So going into Tuesday now. Tuesday, I didn't really like the price action so much, as you guys would have seen from the markup that I posted. But what did we have coming to Tuesday? So into Asia, This is when we were struggling to break kind of this very, very minor 4-hour demand zone that was caused by breaking the substructure, right? And price was kind of struggling to break these lows here. Obviously, during the Asian session, we popped up a little bit. Now, this is where coming in, I set my desk in the morning, coming in Tuesday morning, thinking, right, where's the high probability trades from? And I had this supply zone outlined and then this supply zone outlined to look for the short to try and finally get the 4-hour break of this low, right? Obviously, this is going to be my favorite because it's the top line mitigation. So remember, we're following the mitigations. We've got this one here, right? Mitigated, broke down. Then we've tapped that most extreme, and then we've come down. So again, really I want to trade from the extreme because that's where if I enter a short from here and then price was to push up higher, well, then actually supply has now failed. Demand's probably in control, and we probably are going to break up much higher. So obviously, you want to be getting short from this area, but I'm also happy to trade from more of that decisional as well. Now, as you would have seen in the markup, what did we do? We came up and then we broke down earlier. Now, as you guys will know from the course, what's the thing I talk about all the time, right? If we don't hit a supply demand zone, but we want to get involved in the trade, what is the sign that we look for? Well, we look for a change of character. So price comes up, right? Forming these higher highs and higher lows. I'm waiting for it to hit my supply zone. It doesn't do so, but then I see quite an aggressive move and it changes character. It creates a supply zone. It's going to depend on whether or not this is within your plan, but for me, I'm more than happy to then, with that newly created supply zone, to look to get involved. It's not ideal. It's not in the best area. Sometimes this can happen, and it can just be a short-term move to do what? To generate those equal highs, to generate liquidity, to then come into your original POI, or obviously higher, and that's the risk you run. But yeah, it is there. Now, the reason why I didn't trade this is just because I didn't get the entry that I wanted. Now, there was a clean entry down here, which we'll take a look at now. Right, as we push down a little bit further, we had a little bit of a flip. So we kind of came into this minor demand, reacted, and we pushed down, and then we came back in, and there was a nice clean M1 entry. But I just didn't really like the area because at this point, without obviously the benefit of hindsight that we did break lower from here, but at this point, I was just looking at this, and it just looked very, very messy. It was range bound. It was kind of in the discount of the leg. We were coming off this 4-hour level of demand. It looked like we may be going higher, and I was happy to kind of wait. Well, once I'd missed this entry here, well, I didn't miss it. I didn't get it because it didn't give me an entry that met my trade plan in the M1. But then when I saw this down here, I didn't really want to be kind of trying to short from here. Demand was kind of holding. We're in the 4-hour demand, so I was kind of happy to just be patient and either wait for price to come up higher to these high probability areas, or just sit in my hands. But yeah, ultimately it played out, but it is what it is. And then eventually, with a bit of battling, it did go on to break that low. So yeah, we'll just quickly dive into this section of price action here on the M1 very, very briefly, just in case you guys were looking at that on Tuesday or you did trade it. That's just my opinion on kind of how I was viewing things. So yeah, this is where we didn't pull up to our area. We ended up rejecting. There was like an M10 buy to sell here. We reject that. We get the change of character. We pull back into this zone. More than happy to trade from this zone, but it didn't give me an M1 entry because we kind of just came in, dropped straight down. Right, we liquidated these highs in and out, and then the flip was down here. And for me, it's not in the best area. Obviously, it then ended up being really nice and ended up working out. But yeah, it just wasn't the trade of the area for me, or this area here, right? But yeah, just ended up walking away from the charts basically at that point, and I wasn't really too interested. But then we did ultimately break down. So then coming into today, woke up, got to my screen. Yeah, we'd already seen this pretty much quite a big pump for Asia, right? About 20-30 pips, I believe, which is unusual for Asia to do that. And that's when I'd seen, right, we'd mitigated the EQ of the 4-hour demand zone. We had formed a lower low, but then we'd retrace quite aggressively straight away, which, it's a semi-decent sign that bulls are starting to step in, right? Bears are struggling to kind of sustain those lower lows at this point. But we have a very clear 4-hour demand to supply zone, right? This flip zone. And I'm more than happy to look for shorts. We're obviously playing within this 4-hour range now, which is the same as my M15 range, so it's the same range. And I was happy really to kind of focus on looking for shorts from here. But if we look at the M15, what happened? We kind of moved up aggressively. We got the chock right, so the M15 internal structure is now bullish. We're coming into these old supply zones, but look at the momentum, and then look how weak that reaction is. Just correctively moving down during Asia. We then came into this, it's a bit clear on the M10, but there was an inside bar doji there, right? The flip, let's have a look at it. I believe it was the 10. Yeah, you can see it there, right? Inside bar, inside bar. We came into there, so there was a long trade if you were, keen for that, which was this move down here right at the start of London. So if you had a kind of spotted this flip zone here, as soon as we came into there, quickly show you the entry. So, right, this is your last point. So this is your supply range. Price comes in, it reacts, we get the flip and the chock, and then that's your demand zone, right? And then you can trade this move away here. But I'm happy to leave that at that point. And really, because we're so near to this supply zone, I'd rather just focus on the easier trade at that point. So sat my hands, didn't really like any of this price action. We then swept the high, but it was kind of that aggressive in and out. Didn't really give me an entry down there. Potentially could have looked at a flip here, but at that point, this is where I'm, very cautious of how bullish that was. Very corrective move back in, and then demand's holding, and we're trying to push up higher. So I wanted to see that M15 change of character, and then we ended up ultimately pushing up higher. So then we had another flip. We had this supply fail, right? So then demand was in control, and this is where I was looking for longs from around this region here, which ended up being a loss. Just see where it was again. Lead it from the chart. So yeah, so bear with me. So the area that I'm talking about is this area here. So essentially looking at this inside bar being the demands that caused this supply zone here to fail. Now, this was quite an aggressive trade, and I was kind of accepting the risk here. So we came in, we had this supply zone here, right? This M1 supply zone. So we came in, we reacted, and then as soon as we closed above and we got the chock, right, we have this as our demand zone here. So just quickly draw that on for you. And get my 2-pip stop. All right. So whether you got tagged in straight away, this would have to be quick, or price came down later, ultimately ended up being a loss. So you can see the logic there, but the reason why it's very aggressive is you're trading against that 4-hour supply. But I was basically happy to do that and also look for the short, right? I was just being a bit more aggressive here. I liked the momentum that we'd had up. I kind of saw that we'd kind of really struggled to sustain a lower low. We mitigated the EQ of this demand zone, and I was kind of trying to anticipate this move that eventually did happen, but obviously, it ended up going lower before it went higher during CPI. So not the best trade in the world because of the 4-hour supply I'm trying to trade against. But this is where I was kind of trying to be a bit more aggressive. But then we got the short, right? So price then came up into the extreme of this move, again following the series of mitigations within the 4-hour supply zone. This would then be the extreme. This is already mitigated, unless maybe you look at the wick, but I've kind of seen that as a mitigation, right? Cause a lower low, that causes a supply zone. So this is the last point of supply that should hold. Price came into there, perfect little equal highs there, mitigation, and then we got the breakdown. Now this is where it did get a little bit messy, and why I kind of used this wider stop, obviously 2 pips, but I could have gone with 1.5, but this is why at the moment I'm just leaning to 2 pips. Just find it's a lot easier and a lot less stressful. But essentially we came into our demand zone, we pushed up, so this is where I wait for a candle closure below, and it got very, very messy, and then we didn't get it until here. But when we did get that, we also got the chock. So then boom, that's my A+ setup in terms of M1 price action, and I just entered essentially on that decisional candle. Unfortunately that 2 pip stop kept me in. So the range that I looked to sell from, it was obviously from the base of the reaction to the top of the reaction, right? So anywhere within this buy to sell range, that's where I want to be getting short, but ultimately I refined it to this candle here. But you can see that it came up to pretty much the decisional there, ultimately before the real move kicked in. So didn't move to 4R really until after the news, and then you go, boom, there's a big trade. And I looked for the hedge down here, but unfortunately didn't get it because and this is something I think I need to kind of dig into a little bit more with kind of trading after the news, is because obviously when volatility is a little bit bigger, the pip size of the stop I try and look for with my fixed 2 pip stop loss didn't really allow me to get into to the trade that I wanted to get into, because essentially we came into supply here, we reacted, and then we pushed up. But yeah, I just wasn't a big fan of this, and yeah, I ended up just leaving this and pretty much taking a break even on this position. So yeah, pretty poor mismanagement at my point. I was just quite confident that because we'd come up into this 4-hour supply zone, we were then going to take that lower low. But yeah, this is kind of why you want to partial pretty heavy, especially when you're running over 10 are there. So yeah, I didn't get in a hedge, which would have been pretty much better if I'm not going to take heavy partials down here on the short. And yeah, I ended up didn't getting in the long there, and now we've pushed up higher after mitigating this flip zone down here, right? Supply, flip to demand, we got that aggressive move away, and then yeah, I haven't really looked at any entries since. So coming into kind of these extreme supply zones now, this one's already failed, so now we're coming back into this flip zone here. Potentially we're going to keep pushing up higher during Asia. We'll have to see where we're at when we come into London tomorrow. We've just mitigated the extreme now. Let's see, if there was an entry on the 15 second. Doesn't look like it came back up. So what I'm looking at essentially on the M1, you can see it without even looking at the seconds, is actual demand. It reacted with that inside bar, pushed down, came back into it, but it looks like it just missed it. Yeah, so potentially we could come up into this level, but yeah, I'm not a massive fan of kind of, trading when London's closed now. I'd rather kind of wait until London tomorrow, but this is a very, very decent supply zone. This is kind of the last extreme supply zone that really should hold if we are going to stay bearish. Otherwise, especially now we have this 4-hour flip, we could be looking to come in here and break up higher tomorrow. Yeah, it's looking pretty bullish at the moment still. So I'm personally going to leave that. I don't really like how price action is shaping at the moment. I'd rather wait until Thursday now. Tomorrow we do also have some FOMC meeting minutes being released in a little while. So yeah, I'm not going to look to trade this. I'm going to see where we're at tomorrow. Either see if we start to, ideally get an M15 bearish chalk from this level, and then we can continue to look for those shorts. Otherwise, if we break up higher, then boom, that daily pullback is on, and we can look to start to target these higher prices up within the daily leg. And that's pretty much as simple as the forecast needs to be at this point. Yeah, we're at the top of the 4 hour and the M15 range, come into the extreme. If we start to sell off from here, can definitely look for some shorts to target these lows. But if we do break up higher, then I will be looking for those bigger, larger daily targets, because the 4 hour will then have switch bullish going in towards the tail end of the week. So hopefully you guys took some value from that. It kind of felt like this was kind of just, it ends up following the normal format that it usually does, of me kind of going through every trade or every kind of decent trade of each session anyway. But yeah, I guess my kind of, I don't know, I'll figure it out, but I kind of want to put more of the focus on kind of, how the M15 and the 4 hour and the higher time frames, like how they developed throughout the week, because we know the entry model is pretty much the same, right? And it's kind of picking those higher quality POIs and then knowing how far to kind of hold on and manage your trade. If you are looking to swing, that is, of course, you might just have a very simple fixed hour management method where you're always out at 5R and 10R, for example. Then you don't need to worry too much about that. But yeah, anyways, I'll leave that there. Obviously, next market commentary will be on the weekend, and then we'll have the next Zoom meetup on the following Monday, whatever date that is. I will obviously post it in the Slack group as usual. So I hope you guys have a good end to the week, and I will see you in the next one. Cheers, guys.